Assalamualaikum dan salam sejahtera. Welcome to 𝙀𝙃𝙄𝙎, the show where markets meet minds. I'm 𝙀𝙃𝙄𝙎, and today we continue our journey into the world of trading, not with charts or numbers, but with stories, strategies, and raw real conversations. I'm joined by Gero Azrul, trader, writer, mentor, trading since 2006-2007, Gero. Gero is the founder to the program Road to FTT, focusing on education and mentoring. We'll be chatting about one setup, one trade, a journey into the world of retail trading. Welcome to the show, Gero.
Thank you.
Result matters. Almost 2 decades of experience in the industry. What's your philosophy on trading, Gero?
Eventually, when talk about philosophy, it's come through experience.
Of course.
Yeah, when I first started, I merely focused on the high risk, focusing more on flipping account.
Yeah, all of us.
All of us. It's a script.
Yeah,
it's a script.
Kaya cepat.
Kaya cepat. And then after like 3 years, and I just realized that reward effort ratio doesn't match, meaning that I put lots of effort, but I can see the reward, I see what I'm doing. And then I realized, why not I just use the lowest risk that I can, which is 0.01. With the 1,000 USD account, and then I just trade like maybe 10-50% per month is good enough for me. And then I realized that low risk is one of the way that my philosophy that I choose to hold on until now. So the only setback that when you use low risk, the outcome is low returns. So the only way to get the high return is you need to plug and play the bigger capital. So that's my philosophy, more on low risk high return rather than high risk high return.
Talking about risk and returns, Gero.
Yep.
So say what definition of return and risk will be different
of
among
course,
individuals.
100%.
Your risk, your tolerance of risk will be different among individuals. How do you define a good return? Say, for example, I have $10,000. Okay, I put in the market $10,000, and I'm willing to risk. I'm willing to lose from that $10,000, say 20,000, 2,000.
Okay,
20%.
Okay.
What is a good return for me?
That's actually a tricky question because different people have different stroke. So meaning you have a different risk tolerant, risk averse. For me, if defining returns, so return must be, you need to know which things or what are the things that you need to get in terms of your financial goals. Let's say you need like 5-10%. So that's your main financial goal, 5-10% per month from the 10,000, which means that $500 to $1,000. So that is the first part. And we're talking about risk and return. So I can segregate two main big things. The first one is more on how you treat your risk, meaning that for me, I call it reward risk exposure. So in my experience based on statistics, they call it bell curve theory. More you trade, that you expose more risk.
Yep,
so meaning I keep it simple, not more than 10% per month, so 5-10% per month, because I need to keep it, the risk is more slightly lower than my return. So I need more returns. So talking about returns, again, is first you must define how much you want every month. Right? Based on the basic formula I use, capital times skill set, equal to income. Skill set meaning a return in percentage. So if you're talking about you want to make around $1,000, let's say, so and you have a decent skill set around 10%, and then your capital must be in a mathematical way that your capital is 10,000. So 10,000 times 10% is equal to $1,000. That's your return. So when talking about back to the risk actually for me, I'm willing for each trade, I'm going to put down only 1.5% to 2% per risk. So that's all. Because I know per trade. So meaning if I hit that level, so I'm going to stop eventually that day, and then I'm going to continue for the next day. So why? Because I need to keep my sanity in trading.
True.
Yeah, because I might be too emotional. I maybe come to revenge or something. So basically it's need, I call it one good trade. How you treat your trading. That's how you treat yourself. How you mentally prepare yourself. How to trade every day.
The reason why I touch on risk reward and the reason why we are talking about risk first, that's normally not what traders talk about. When first you come into the industry,
exactly,
you're talking about returns. We're talking about cepat kaya. We're talking about I put $100, I want 2,000 next week. So, but being in the market so long, Gero, you and I both, risk is the center of everything. Is the focal of everything.
100%.
So, and it goes back to what you do every day. Because when you talk about risk, you need to talk about creating or following routines. So can you describe to me, Gero, what is your typical day-to-day trading? What do you do every day?
All right. Basically, I have I call it 1 year projections. So I have my critical numbers, meaning I have a specific numbers that I want. So I break down to monthly and to weekly basis. Let's say in my age trade, I only trade like 5 to 10 days a month. And then if I hit my critical numbers, such as I have this thing called a strategic trading implementation.
Okay.
And I only focus on gold. Why? It has a good volatility for me for intraday to scalping trading. And I only take my take is only for 10 pips to 50 pips, which is easy if you trade gold, right? And then if I hit like $5, because 0.01 is 10 cents, so you hit like 50 pips, $5, and then I'm going to stop for the day. So if I got more, let's say $12, meaning I hit that weekly basis bar. So wish is going to project to monthly outcome. So my monthly outcome only 5 to 10%. Even I can get 3% to 5% is good for me. I have a tiering called, meaning my first target 1 to 3%, the second target is 3 to 5%, the third target is 5 to 10%. So my routine is I break down those, and I don't chase USD. Because previously I chase USD like 50 USD, 100 USD, even 1000 USD a day. So rather than think about USD, so I think in percentage. Why? Because percentage is scalable. Meaning if you get 3% based on your capital, it's going to make all the difference.
The problem of the same that when you look at USD, sometimes the return in terms of dollars and not in terms of percentage, because one will never satisfied or one will not know how much. $5 today, say you just receive your salary. $5 doesn't mean that much to you compared to if you're middle of the month.
Okay.
No money. $5 is almost
everything. High valuable.
So the value of the actual value of dollar they could be different depending on you, on your situation. So looking at percentage will be interesting for traders. It will be the best to me if you ask me the same opinion. That is another point that I want to highlight. What you've been saying so far is about objective.
Yep.
Knowing what you actually want.
Exactly.
But most of traders, even you and I, when we started, we didn't know what we want. We want to make money only.
True.
But how much? As much as possible.
Yeah.
So how do you come up with objective?
All right. So
how do you know when I put 1,000, I want to make how much?
Rather than I think about that different way, I would like to say how we can reverse engineering, so-called, this formula. So basically, the first thing in my, I call it a financial freedom blueprint, so that the first thing you need to clear is your financial worksheets. So based on financial worksheet, you know how much you need to pay the mortgage, how much you pay for your accommodation or logistic or expenses, fixed expenses. And then from that, you determine how much you need to at least pay your fixed expenses. All right. And then you need to calculate back how consistent you are in trading through at least a measurement tool such as MyFX Books or MyFX Blue or any tools that can showcase at least portfolio, at least for 3 months.
You can depend on that income.
The only way to show you legit trader is MyFX Books. It's not a car. It's not a material things. It's not the lifestyle.
Quite a lot.
You need a measurement tools. It's like you go to the bank and you said, hey, mister, I want to get a loan. And the banker said to you, okay, so where's your proof? Oh, I'm swear to God, I have like 10,000 a month. I swear to God. So swearing cannot help you, right? You need at least a documentation, bank statement, or some salary pay slip or something like that, right? So same goes to trading. So for me, I believe that the only way to show you legit in MyFX Book. So back to your questions. So how much we determine our technically, logically, how much we need to produce or to get income from the trading, right? So the first thing, return on the percentage. First thing, you need to know how much you need a month. And don't go beyond unrealistic. First, go for your fixed expenses. And then how much comfortably you can make. Maybe 5%, maybe 10%, even maybe 50%, or maybe 100%. For me, I always go down to 5% and below, or 10% and below. Because for me, that's more logical and more realistic. And that's
the
where
problem. We started with trying to make 100% easy 1 month.
Because back then when we went through such as a forum like Forex Factory, even when I started back at Cari Gold. So everybody is talking about how to make kaya cepat. And then when you sign up for the any broker platform, they said invest what you afford can lose. So they literally somehow indoctrinate your mind that say that okay, invest then you how much you're willing to lose. So that's why I'm quite not familiar. I'm not quite support that kind of idea. I'm more on belief that rather than you invest what you afford, you need to protect your capital. So tally with the Warren Buffett said, the first rule when it comes to trading investing, the first rule is never lose money, and the second rule is always remember rule number one. So
never lose money.
Never lose money. That's why the whole game. Back to some of your question based on philosophy, I always risk driven. So meaning I always protect capital. Doesn't mean that I don't make any money that month, but as long I have my capital, that's mean I'm good. Which is separate me from the 95% trader are losing, blow the account.
Surviving.
So yeah.
Yeah.
We went through
the
like
longer you survive, the better chance for you to make.
100%. Exactly.
Yes.
Yep.
Okay. Short term, long term, which one is better? We can break it down to gold and also to trading, because we can say, for example, if you are trading gold, gold movement can change now is changing.
Yep.
So trading approach.
So you're talking about technical issue and based on long term view, meaning like can you hold up for like 3 days, 5 days, or even 1 month, 2 months, like a swing? Is it you say right? You're saying so rather than focusing on long term, short term, I'm more kind of a guy that I need to keep whatever I have, all right, as instantly as I can. So for example, I'm more on intraday to scalping because I have a specific target, right? Because why I have a specific target, I need to meet certain amount of money because I have expenses to pay every month. And even when you are above 40, you know that you need a certainty rather than fluctuality. And then back to the questions, which one are better, long term or short term? I'm more kind of short term guy because 80% in terms of trading. Why? Because in market, 80% is sideways. 80% is sideways.
Most of the time, yes.
Most of the time it's sideways. All right. Chart is not like garis lurus macam ni.
Yes,
it's not a straight line. All right. It's like sideways. So I'm more focusing on the sideways because when you think about the thread is like the gumpal, or meaning it's in the sideways. Then when you loosen up the thread, meaning it's more longer the thread compared to the if you want to stay with one price to B price, A price to B price. So it's more longer. It's more chances. It's more rewarding. It's more opportunity. So in a nutshell, I can say I'm more prefer on the short term, but in the same time, we must have a system. We must have management to meet our financial goal, short term and long term.
So basically, coming back to basically knowing what you want.
Exactly.
But that's the difficult part, because I myself, when I started, because I look at my uncles, my families, my friends, all of them making monies. That was stock market 1990, even 1990s, 1997.
Right.
And I came in the market with the same expectation. Put in, at that time it happened, it worked because the market was bullish run. January 1997. That was the first time when I put money in. Then that's bull market. That time. Then lucky for me, I was lucky because I was buying properties. So I put money off the market. Then after that, Thailand happened, Malaysia happened, 1997.
Economic slump. Yeah, I still remember those days.
Market was not the same at that time. And I tried the same approach, basically daily intraday trading. That was stock market. But when you look at the market nowadays, for example, currency, crypto, and commodities, gold,
right.
You are talking about more volatile market. A more volatile movement, a more you can open chart now, you go somewhere else, look at it, and different direction already. If you look at talking about 5-10 minutes, 5-15 minutes,
it can be
chart. It all come back to the trader, whether short term or long term. It depends on how much time you have to manage your trade.
Exactly.
Is it?
We can say that. I'm more kind of approach that as a trader doesn't mean, because when we talk about trading to other people like a layman, people that outside there, when it comes to trading, we need to somehow to watch the screen like 24 hours. Even you while you're eating, while you're going to bed.
Some people think the more that they sit down in front, they make more money.
It doesn't work like that. From my almost 2 decade experience, it doesn't work like that. And what we want to do is actually to catch the I call it intraday to scalping trend. So my approach
Sessions?
I don't care about session actually. I'm more curious. I'm more focusing on the setup. So I call it one good setup. So only one good setup. So just focus on one good setup. That focusing on H1, H4. Because it's a bridge between the higher time frame and lower time frame. So I'm on H1, H4.
The structure.
The structure. I'm focused on H1, H4 because I want to catch the intraday right? The trade, as long as one and H4 is same directions. So I'm going to entry an H1, exit on H1, and based on my strategic trading, 10 pips or 50 pips. That's it. So meaning that I don't wait more, because for me, in trading, we need a new way of trading. We need less time, less effort, rather than more time, more effort. So how to go for less time, less effort? You need somehow use so-called Santai approach, meaning 0.01 based on 1,000 USD, meaning
Coming back to your risk.
we're coming back to risk. And then you just target 10 to 50 pips, 10 to 25 pips. Okay, there's a range there. And then when you focus on that range, meaning you're going to capture, you hit your target. And then that's why we need to think in percentage, because $10 is actually 1%. Based on 1,000 capital, if you compare to that. So 1% is a lot. It's actually, even you make $1,000, you have $1,000, you use 0.01 and you take profit like $10 per month, 1%. If you times 12, it's actually 12% per year.
12% per year,
Yeah.
of course.
So my logic is, rather than you try to somehow, of course you have opportunity to flip to make 1,000%, but I'm more kind of conservative guy, more on orthodox kind of approach, meaning that I would like to save. I would like to somehow is risk-driven mindset. So rather than based on conventional return, I don't want to say any platform conventional return, rather than 5 to 10% per month, per year, why not you're gonna get 5% per month, which is equivalent to 60% to 100% per year.
Yeah.
So the whole idea is, if you have, let's say, $10,000, and end of the year, you're going to get approximately around another $10,000, which is good investment. So that's how
That's very good. Yeah,
that's how I see it.
Yeah.
Rather than before, like we started before, we look into how much I can put $1,000, how much we can make in 1 day, 3 days, with like countless, or there's no boundary that we're heading to so many target. Even we don't have any specific target.
Basically breaking your goals to smaller parts, but actually have a longer objective.
We need that very specific framework. Because when you're above 40, 50, you don't have any more willpower compared than you young. When you were young.
The good old days.
The good old days. and you need to think about more security, your family, your children. And you need to pay everything.
Anything happen to you when you're reaching 40s or 50s?
Anything could happen.
Financially, it's a disaster.
Even you talked to me earlier before we started our podcast about the health, right?
Yes.
So the health is really important nowadays. We know lots of our friends dead already. It's not only sick, but dead. Many people of trade dead. Why? High stress and also not sedentary, lifestyle. Exactly what we're looking for. We need a new way approach. To become a better trader, better health, and then we get better wealth and a better relationship.
Of course. Okay, your view on news trading.
Okay.
We start. Remember last time when we talk about NFP, 200 pips is easy. Nowadays, NFP 40, 50 pips.
Exactly.
And last night, before this, recently we have CPI data. Didn't really move like last time, the good old days. 200 pips was easy, Euro, US dollar. Gold, easily it move $20 movement after news.
Right.
What's your view on news trading nowadays?
This, you know why I'm laughing.
We did that before, right?
Yeah.
So we need to wait for whatever news platform you're looking at, refresh. Oh, green.
Yeah, and then you go for it all in, right? So how I take on this, and this is a different school of thought, right? So some traders, which is good traders, which is they got a very decent profit, good profit.
Yes.
They're 100% on news. And then they put technical where to go placing trades or exit the market. For me, I don't care much for news, but I'm more a chartist guy. All right. Of course, I take news. I also take view on news on sentiment.
That setup, you go for
I go set up. But also I know gold is more sensitive on sentiment, so I need to watch a war, geopolitics, and so on and so forth. But very mild on that sense. So I'm more focusing on the setup.
What is the percentage? How heavy you put impact of news to your setup? 10%, 20%, 50%?
I actually, my take on news, it doesn't bother me much. I don't care any news. Why? Because news for me, in my definitions, news is either accelerate your profit or accelerate your loss. basically it's going to accelerate your setup. So many, even this is a frequent question I got through my, webinars, seminars, and they ask me, Coach Gero, so how you take on news? Because I have this very systematic trading plan, but when news came in and kacau, and suddenly news, they call it news, kacau, langgar.
Everything langgar.
Langgar, they say langgar. So I know, technically it's only accelerate. Either you get faster profit or faster loss. So if you risk averse, so avoid news, that's all.
If you define your risk.
They define your risk, it's up to you. But for me, I don't care much for news, but I'm more focusing on the big thing, let's say geopolitical issue, wars.
Remember 15 January 2015?
Yeah, 2015, right?
That's when the SNB bomb.
Yeah, and then suddenly
everything kacau.
Kacau.
You the chef pair. Were you in the market that day?
I've been a while, but many situations. So 2015, even back then, Black Swan, Brexit, even the after the pandemic, it's called a Ukraine your war. Yeah. So for me, how you be able to
if you define your risk.
I'm talking about defining risk.
Whatever happened.
Whatever happened. So technically, I don't go for how to spot on the news, but as a trader, you need news somehow
to move the market.
The market. But for me, I'm more on.
You put in position, the market doesn't move. It's not good too.
True.
You wait for 2 weeks, nothing happened.
And even nowadays, if you're talking about news, there's no news. Also, market can become volatile suddenly.
Yes.
Right. So in my almost 20 years experience, I never look the market as same market over and over again. I always learn every day. Actually, to be honest, even today. Even today.
We learn every day.
Yeah, you learn every day. It's the same market. People say, it's the same market. It's the same market. Because sometimes the old philosophy you cannot use nowadays. Such as, apa yang naik pasti turun. So there's no such thing, apa yang turun pasti naik. But all this, apa yang naik pasti turun.
Yes.
That's kind of mindset you need to shift a new mindset. You can see gold, tak turun-turun. Right? Never come down.
Bitcoin.
So apa yang naik pasti turun is not equivalent anymore. It's not mesh and resonate anymore. So need somehow update because market change, government change, even geopolitical change. That's what happened nowadays.
So looking at all that, okay, most of the time a trader fails not because of technique.
Yep.
It's more of emotion. Revenge trading, FOMO. What can one do to control all those? What you know that feeling. You in the market 2-3 days. You've been losing, and you try to revenge. This time I put in more. How to control that? It's not easy. Even myself, it took years for me to control that.
Agree.
How do you control that?
I still call it a tricky question because if I ask the mass people, meaning the people who came on my seminars, how many of you have emotions in your trading? How many of you think that emotion, if you can somehow overcome your emotion, you're gonna success in trading? So many of them just put out hand, right? So some of them, I said, your emotion you can control or not. So some people yes, some people no. My take on this emotion is you must have a clarity. All right, first clarity. You need to know what system that you're using, what the framework that you're using, that going to yield your return every month and yield your return annually.
So knowing your system parameters.
Yeah, system parameters, exactly. So we need a very specific framework.
And knowing what you want.
Knowing what you want.
Of course.
Because clarity, we create confidence.
Of course.
So when you have confidence, you can put emotion down. All right, so you need a clarity.
Not having, some said don't have emotion.
You still have emotions.
We are human.
Yeah.
But the thing is controlling and aware of it.
And it's going to develop over time. As a trader, you're going to train yourself, by the way. Somehow your memory muscle going to grow up over the years. Eventually, you know, if you ask, simply you ask a student or you ask any people that came to seminars or workshop, what do you think that you are losing? What do you think? What happened in losing? Most of them, they can answer. And what do you think? How to overcome the losing part? They already know.
Yes,
but they literally can't do it. So
is it self-sabotage?
We can say it's self-sabotage, but somehow rather than just do by yourself, why not you do it with a community, with a mentor that's going to guide you? Because I think the biggest learning is not in seminars. The biggest learning is while you're trading and you need a mentor beside you. That's where your real learning Okay, guidance come in.
Mm.
So, floating apa nak buat? So the mentor say, okay, this is how you control this. So you need this mentoring, on-job trading, on-job training, all right, on-job, how to implement it, on field. You need a mentor rather than just get information, because the real experience come through when you do live trading. Some people, when they go to seminar, yes, I know, I believe I can do it, but when they're alone, they got blurred. And then
Hantu kaya.
hantu kaya, hantu, and they sucker, broker jahat, so on so forth. Why they did this to me?
Of course.
And yeah, and then right now I can see many people went to Telegram and asked for some simple question. Boleh hold ke tak? Boleh masuk ke tak? That's why you know that they don't have a plan, don't have a framework, they don't have a clarity. Because clarity precedes mastery. Yeah, trading plan. That's why. Then they don't hold on. They didn't hold on the trading plan. Why they keep changing trading plan? That's the biggest mistake as well. Keep changing trading plan.
Describe a good risk management system that a trader can follow. what nowadays there are a lot. There are a lot. But
how they approach the market, right?
Pyramid, martingale,
anti-martingale,
all those things. We've been through all those. So what is a good risk management system?
I'm quite biased because I'm saying this because this is how I put my approach on this. When it's come to risk management, the first thing I'm going to define it by the biggest capital you're going to have, all right? Then the lowest or the smallest size you can place your trade into the market. Meaning, if you have $10,000, you use 0.01. That's the best way. All right, but it doesn't make sense when you project to percentage, right? Because it's going to take you a smaller percentage and not yield for you a good return a monthly or daily or weekly basis. So how I go for this, I'm focusing on why every $1,000 use only 0.01. So just use for that. My approach, rather than martingale or anti-martingale, I use linear. Even when I do defensive, meaning I layer. So I layer because dollar cost averaging, I put more layers, is because I want to exit the market, not I confident with the market. Exit the market, bail out from the market as soon as I can. So when market against me, I know that's not right. Many traders, I think, and I believe as well, that when they do layer or dollar cost averaging, because they believe the trend. But I know when I do the first trade and then market wins against me, I know I'm totally wrong. Even after that market, going
not holding to your losses.
Not holding to losses. Yeah. So I know I must execute exit as fast as I can. So basically, risk management.
Basically, knowing when the right setup to scale in, to put in more, and the right setup, knowing when you're wrong.
Yeah. Admit first.
Yes.
Some people doesn't admit.
Very difficult.
Yeah, they doesn't admit. Market. I believe. I still believe, and I'm right. There's a mechanism. How people neurologists said how people approach the market is based on their psychological behavior. Either they fight or fly or freeze.
Yes,
some people also
freeze.
freeze. I don't know what I want to do. All right. For my management that I teach my student is $1,000. This is called performance account. This is where you control all the account because I have another scaling account. So $1,000, 0.01, and not more than 2 layers for beginners. And if you are quite intermediate or advanced, 2 or 4 layers. That's it. And bail out as fast as you can when the market against you. That's it. Take profit just like 10 pip, 20 pip. That's it. When I introduced this approach, people said to me, bila nak kaya? Kaya is when you scale. You scale up. So you need to put first is you need to go for the lowest.
Of that question, bila nak kaya, is you looking at bila nak kaya, looking at one entry.
Yeah. Looking for one entry and you don't have a system.
Looking at the big picture.
Yeah, you need to looking at the big picture and you need, like you said earlier, which is 100% true, we need a framework in place. We need a system in place. Mechanical ecosystem system that we yield return that we need every month. Yep.
Okay, that is on risk management. Finding a system that suits you, Gero, is well known for preaching about real accounts. How does a trader know that he or she is ready for the real?
The only way to learn is actually doing it. Meaning,
put money, do it.
Yeah, you cannot compare that. Let's say you trading a demo account for 1,000 years. You dead and you become zombie or you become some gene or something. 1,000 years is not the same that you trade one day with a live trade account. Why? Emotions, and the second part is the real time experience. You're not gonna get a real feedback, right? But when you do the live account, don't put as much capital you can. Just put a decent capital. For example, go for low risk money management. For example, $1,000, 0.0. You're gonna save. You can sleep at night. Compared to $1,000, you put 1.00 lot.
Am I right if I say I know that a person is ready to trade when that person know how to accept losses?
Yes, you can do that. You can do that. That is actually I call it a market biofeedback. It's basically how you gather your feedback from the market and how you gather your reaction to the market and put things together into the specific plan that you can yield through the very specific financial outcome you want. So how they know they can trade is actually they need to trade first, and they understand what are the risks. Are they risk averse or the risk appetite is high? So they need to define that first. And of course, when they know how they can safely start trading with the mentors. If they have a mentor who have a very specific program, they're going to teach them step by step, move by move. It's going to help them a lot rather than they do it themselves. So knowing how to trade when you know to trade is actually, for me, like you say, there's a many variable you can put or parameter you can put. You can say accept losses. You can say you have a trading plan. But for me, just do the real thing and then learn from there. Because in the Bloom taxonomy style, the first thing, some people then they learn but don't know how to trade. Some people know how to trade but can't even make money.
Yes.
Some people make money, can't even consistent.
Yeah.
And even some people, they're consistent, even not getting rich. Just use $100 for like 10 years, 20 years. I have a friend like 15 years trading.
We do have
still use a small capital, try to scale up with a high risk. That's kind of approach.
$100 try to grow.
Try to grow. Which is they make money.
Yes,
but
of course.
I don't think they're going to be ultra rich. They just make money.
Yes.
So it's a different principle when you go down for each practical step based on your, I call it a trader script, right? In the trading industry or in the trading experience.
More or less the same step for everyone.
Yeah, more or less the same step. It's a script.
The same everywhere. No matter what instrument you trade, the progression more or less the same. First, not just knowing the market, but knowing what you want.
Yes.
Then, of course, knowing the market. And basically, the most important is knowing you.
Exactly. And understand ourselves. Understand how we react on certain emotion or certain situations. So that's where how I explain this in the journey. I call it $1 million USD trading roadmap. Why? Because it gives me $1 million for using this roadmap. So the first one is you need to somehow find your one good setup. One good setup, just one. Don't focus more, just one. So I maybe I can say that I take it from Bruce Lee. Bruce Lee said that he doesn't scared or doesn't afraid with people who has like 10,000 kicks, right? Styles. But they're afraid like one kick that, practice 10,000 times. You need just one good setup, one killer setup. And that one good setup is like a vehicle. And then you need a driver. The driver is one good trade. One good trade is how you behave in the market, like we talked earlier. And then after that, when you combine one good setup, one good trade, it's going to create low risk, low return. It's still low return, like 3%, 5%, 10%. And then how you scale up, you move to the scaling game plan is called scale secure. You need to scale it. You need a bigger capital, lot size, frequency. That's how the management, like you said earlier, before the talk show, that you mentioned that you are right. We need to manage it. How you become wealthy is you manage it. Rather than you have one store, you need to have a branch. You need a system in place. You need a bigger capital, right? And then after that, you go for the critical mass, meaning you need abundance of money, and you need more money to make abundance of returns. So one good setup, one good trade, scale secure, and critical mass. That's the 4 steps.
Okay, Gero. Now we move on to the next segment of XMPipcast, the rapid fire question. Okay. So question 1. What is the biggest mistake you made in trading, and what did you learn from it? All of us have that one.
If you say the biggest mistake, I had done lots of mistakes.
Yeah. Then name many years. One that you still remember now.
And I can say a very specific thing that I'm totally locked into high risk, high return. I thought that the only way.
We started off all of us.
So I think the biggest mistake that I did, because I'm truly big believer on the high risk, high return, and then I realized after 3 years.
You're not getting
I'm not getting it right. It's the same step.
Penat.
Penat. If you're talking about any system, you can tell you like an arcade negara. You know any system, any indicator. You know everything. Yes. But eventually, what you're going to do about it? And you start doubt yourself. I think that I make money, but where's the proof? The same car, the same house, the same lifestyle. So eventually, I also asked the same question for me. So that's where I realized that the biggest mistake I did before, that high risk. High risk. I know I'm quite against nowadays, especially the youngster now. That should not fly. That's called those the risk word, something like that. There's some words or Gen Z, something like that. So I'm not more that kind of style because I know maybe age factor or something or experience factor.
We are still young.
Yeah,
We're still young.
Nevertheless, we're still young. Yeah.
I ate hard.
So the biggest thing that I think the biggest mistake is focusing on high risk return. But I know that rather focus on the low risk high return. That's why I take this approach. Then I share with other people as well. Yeah,
Managing the risk.
Yeah, managing risk.
Okay. And question 2, Gero. Do you have a trading superstition or ritual you swear by?
All right.
Doa ke sebelum entry. Selawat ke? What do you do? Do you have any?
Yes, I have. The first thing is mental state. Mental state meaning you need to calm down. You don't
Be in the zone?
Yeah, be in the zone. Yeah. Be in the zone. So you need to know how to get your zone. Some people maybe ambil wudu ke, semayang ke. I don't know. It's different people, different stroke, right? So for me, just be in the zone. So eventually, when you long time enough, you know when you in the zone and when you're not. And you can feel it. This is the time that I can do it. Right? This is the time that I still on run errand. I just maybe have lots of things to do. So I need to avoid it. Even I have done. If you're talking about the not only biggest mistake but silly repeatable mistake I did before many years ago, that I have these activities when I travel. I want to trade. I still want to trade. It's okay if you have a perfect
routine,
line, but sometimes you open position. And your flight, you need to check in, and then suddenly you don't have the line, you're offline, and then you start. Right, if profit, it's good, right? But when it's you're not monitored very well, then you're gonna lose. So I have this silly and repeatable mistake that I do a lot of trading while travel. Now I try to minimize it. Back to trading the zone. It's not the zone actually, because you're with your wife, you with maybe your kids, or maybe your significant others, or
basically
or with your
you
family.
are not in the space.
You're in the space. Yeah. You need a space. You need a space. Some people, do trading while they're working, and they wonder why it's not happy. Some say that it's not berkat. Yes, maybe it's not berkat, but somehow you're not in the zone, right? So you need to find the zone, and maybe I'm gonna to finish it with this. On top of that, always risk driven. So my mindset is always not reward driven. So always protect capital, because I have this saying, call it protect first, profit later. So always protect capital. Even when you protect capital, you barely survive, and then it's gonna create a sustainability, and you can scale up.
Okay, Gero. So recapping back to what we touched so far, Gero. Basically, define your risk. Know what you want.
Yeah.
Do the same routine. Identify that one set up for you. Don't aim too high, but aim something that is achievable, and defining risk,
right,
and basically knowing yourself. Okay, so basically that wraps up today's episode with Gero. Huge thanks to Gero for joining XM Pipcast and sharing his insight on trading the financial market. If you enjoyed this chat, don't forget to subscribe, leave a review, and follow us on YouTube at XM Malaysia and Spotify also at XM Malaysia. Thanks for listening, and catch you next on XM Pipcast.